what do you use it for? So there you go. Home equity lines of credit. What are they? Why are they important? How should you use it? What should you use it for? Can you even get one? Do you need one? For whatever reason, this question has been popping up a handful of times to my existing homeowners. So I really want to explain the ins and outs of a home equity line of credit, why you should care about it, and if you are planning on getting one, what you need to know about them. It really is in the name itself. A line of credit, a home equity line of credit, is a line that you're borrowing against the equity in your home. So let's say you bought your house, 2 to 3 years ago, you paid $300,000 for it. And today, guess what? It's worth $600,000. So we have $300,000 in equity. What you can do is you can get a line of credit. There's still going to be limits when it comes to the loan amount compared to the value. If you really break it down, it's essentially just money that you can use. You don't have to use it, but it's available for you. Now, what would you want to use that for, right? So the best way I can explain a home equity line of credit is it's like a credit card on steroids, right? When you have a credit card, you get a certain amount of money that you can spend, and then you spend it and you pay it back. And when you pay it back, the line opens right back up. So if it's a $1,000 line and you spend $500, now you only have a $500 credit limit left. But once you pay the $500 that you borrowed, it opens right back up to $1,000, and you can just keep doing this over and over and over. Same exact way with a home equity line of credit, except it's typically on a much larger scale. You can get that available credit line up to the amount of equity you have in your home. So there's a lot of pros to this, but there's also things you want to look out for, and there are some things that I don't recommend you use a home equity line for. Just like with credit cards, a home equity line is going to be something you want to use for short-term financing. Let me say that again, short-term financing, money that you can borrow, but you're going to pay back. And I would say if you have plans to pay it back in a year or less. So something you don't really want to borrow past 12 months, right? Things I typically don't recommend it for are debt consolidation. That's the number one. If you're looking to pay off higher interest credit cards, an auto loan, whatever the case may be, I strongly recommend that you do not use a home equity line of credit, and here's why. Because I have a reason for everything, right? When you're borrowing money from a line of credit, just like with a credit card, if you borrow $20,000, your minimum monthly payment is just that. It's going to be a minimum. It's going to be mostly interest. If you were to borrow 20 grand and pay the monthly minimum every single month and nothing else, at the end of making that payment for the next 5 years, you're still going to owe pretty close to 20 grand. It's terrible. I know you're paying mostly interest in that situation. But so that's why you have to either be, number one, disciplined, understand the math, the interest rates, things like that. And I'll go into that in a minute. It's not really meant for debt consolidation because it's a revolving line, right? It's meant to borrow something that you can pay back right away. When it comes to debt consolidation, I have a separate video, which you can definitely check out. And that one explains a better way to use debt consolidation with home equity that is not via a home equity line of credit. It's through a cash out refinance. A home equity line is going to be more for that short-term financing. So I'll explain a few different ways you can use it, right? Home equity lines have variable interest rates, which means the interest rate changes. It's not fixed unless your bank offers something called whatever lending institution is going to give you the home equity line. Sometimes you can get what's called a fixed rate advanced, to where let's say, okay, I want to pull out 10 grand. I want to pay it back within 3 years. They can set your rate, fix it, and set that term so that you have that exact payment. Not everybody has that though. So if you don't have that fixed rate advance option and you pull out 10 grand and you want to pay it back within 3 years, you're going to have to do the math manually to figure out how much you need to pay monthly to have that paid off within 3 years. So that's why I say you have to be a little more disciplined with the home equity line of credit. Because again, if you max that sucker out and if you get a $100,000 line and you pull out 100 grand to do home improvements, to do whatever, and you just keep making that monthly minimum payment, you're going to keep making that payment forever, and it's not really going to do anything. And that's like the worst debt to pay off because it has a low payment, but it's a large dollar amount. So by the time you pay it off, it's like, I'm not really putting myself in a better financial situation. So just be careful with how you use these home equity lines because they can be great tools Just like credit cards are great tools, but if they're not used properly, they can honestly put you in financial ruin if you don't do it right. So, things to watch out for. The interest rate is going to change with the market. So as the Fed rate increases, this is one where the Fed rate matters, right? It's different than the mortgage rates. The home equity lines typically go off of the Fed rate. So as that rate increases, your home equity line rate is going to increase as well. So again, something to keep in mind. I do think they're awesome for if you're wanting to get starting in real estate investing, or if you want to home flipping, right? I think home equity lines are best used for home flipping. So if you find a house and you know you can pick it up for super cheap and you can put a certain amount of work into it and then flip it and sell it for a profit, and you don't want to use your own money to do that, a home equity line is a great way to grab that capital to either pay for the improvements, maybe the down payment for the loan. Again, there's a lot of cool things. I'll make a separate video when it comes to tips and tricks as far as home investing goes, but a home equity line of credit is a great tool if you're looking to get into real estate investing, specifically flipping. Someone's calling me. Another thing home equity lines are really great for: additional short-term financing, right? Let's say you have a good amount of money in the bank. Let's say you've got, 40 or 50 grand, you're ready to make some home improvements. You have the money, but you don't necessarily want to blow your whole entire amount of money that you have up in your savings on those home improvements. Well, this would be a great opportunity to use that home equity line of credit because, again, the interest rate is going to be pretty low. There's tax benefits as well because it's attached to your home. You can use those funds to do those home improvements as long as you know that you're going to pay them back, and you can, be disciplined as far as when you're going to pay them back and get them done. That way you don't have to blow your entire savings account. So using that money when you have the money, if that makes sense. So that way you're not blowing your savings, you're freeing up some capital, basically. Home equity lines of credit are great tools. Once again, I do not recommend them for debt consolidation. We have a separate video about debt consolidation if that's something you're interested in, I can definitely help with that. But that is kind of the ins and out of the home equity line of credit. So if you would like more information on this, or if you're trying to figure out creative ways to finance different things, feel free to give me a call and I'd be happy to help. Thanks, guys.